Welcome to Foundation, a podcast about home building from the ground up. Buying a house can feel very overwhelming, and building a house can be even more challenging. But we're here to help. Throughout this series, we'll be interviewing realtors, builders, developers, lenders, and anyone else involved in the home building process. After listening to this series, you should have the right tools and knowledge for the next steps needed to build the home that you've always dreamed of.
Today, we have with us Tom Butorac. Tom is a former banker in the Missoula area and has been a Ranch Club resident since 2005. Tom is well-versed in lending and is going to help us navigate the lending process. In this episode, we'll cover the different types of loans out there, what a pre-approval process looks like, and what life on the Ranch Club means to Tom.
And we're here with Tom Butorac. Tom, what's your affiliation with the Ranch Club?
Well, a couple of things. I'm a retired banker, and the project was started in 2003. My wife and I sold our home in Linda Vista in 2005 and decided to build. So we found a lot at the Ranch Club and built a new home and moved into it in 2006. And then in 2007, while at the bank, some folks came in and wanted to acquire the whole project or the remaining project. So I helped put the financing together for it. So I've been at it quite a long time.
So you were one of the first few people to build at the Ranch Club?
Yeah, I'd say so. We were, I think the townhomes were built, and there's about 30 of those. So I'm on lot 24, I believe, and so we were one of the first, yeah.
So you were still banking when you decided to build?
Oh, yes. Mm-hmm.
So the Ranch Club is a very special place. Like, you drive out there and you instantly know, like, wow, you almost don't feel like you're in Missoula, but you still get that Missoula vibe.
Right.
What were some of the things that you liked about the Ranch Club compared to Linda Vista or, Target Range or other areas around Missoula?
Well, the main thing is I'm a golfer, for one
that's
thing.
Big.
Always kind of wanted to live on a golf course. And the way my home is situated, I have pretty much an unobstructed view down over the hill to this pastoral setting of some horses grazing, and nobody's ever going to build in front of me. So, and I love the demographic. My wife and I are grandparents, and our little grandson is 9 now. And it seems like the demographic out there is 35-ish to 45-ish with kids, and their parents followed them here.
So there's a couple are there multi-generational families that live out there too? Or?
Not quite so much, but it's mostly Grandma and Grandpa have a home out there and play some golf and enjoy the pool with the grandkids, and kids are along there as well. So, and there's a lot of pride of ownership. So just a lovely area. It's nice and quiet.
Yeah, I drove out there a few days ago and noticed a lot of people just out walking together, friends walking together. Everyone's out in their garden this time of year. I couldn't believe how many people take pride in their gardening out there.
Oh, it's incredible in that regard, and there is a lot of pride of ownership that shows, and it's just a great place to live, and it's really quite close in when you think about it.
So we can dive into the weeds here and talk about lending, what it takes to build at the Ranch Club. That is a whole process in itself. What are some of the biggest differences in terms of lending when buying a home, let's say in downtown Missoula or in the neighborhood, compared to building a home at the Ranch Club?
Well, I think length of time obviously is the biggest one. And with the existing home, for the most part, what you see is what you get. But you start a building process, and it is lengthy. Mm-hmm. First, you got to find the lot, then you got to find a plan you like and a builder who will build it for you. go through all the permitting process. The builder typically does. And along the way, you've got to figure out how to finance it. And there's a number of ways to do that. But it's a much more complicated, it's gratifying because of all the decisions you have to make along the way. And there are many, many of them.
Yeah, and you feel like you almost have to have your hand in every decision, or do you feel confident ever like leaving some like decisions up to, let's say, the builder? I guess that's all personal preference, really.
Some of it's preference for sure. The builders are competent, and you can feel good about them and the inspection process from the city and from the lender. But the decisions, I guess I'm referring to the myriad of personal choice items.
Right.
Everything from color schemes to picking out cabinets and flooring and plumbing fixtures and electrical fixtures. And you have to shop for all that stuff.
Yeah, those tiny, minute details that, when you already buy an existing home, you're not really thinking about what types of plugs there are. But when you're building a house, that is within your decision making.
Right. You'll have what the builder will give you a budget, and then he'll suggest a couple of retailers to go and look at what they have. And just for example, if you go to a lighting store, you have a budget, but my gosh, there's so many different lighting fixtures.
Yeah.
Yeah.
So there are a few different types of homes. Let's say I, find a house that I want to build, or a pre-built house already out there. Could you cover the types of loans, the different types of loans that are available to people that are interested in buying a home?
Sure. Excuse me. The existing home is the easier one because it takes less time. And there's really two different types of loans. 20% down payment conventional loan, or less than 20% typically is what we call an insured loan, and they can be insured by a private insurer with as little as 5% down, by the Federal Housing Administration, FHA, 3% down, and by the Veterans Administration, 0 down.
Wow.
So,
0% down. That's pretty. That's a great benefit to VA.
Yeah.
But that just means that they're going to be paying that insurance quite a bit longer, right?
The insurance you do pay quite a bit longer. As I recall, with a conventional, once you get your loan down, principal paid down, I think you can petition to drop the insurance.
Oh, okay.
You cannot with VA or FHA.
Gotcha.
VA does pay the premium for you.
Wow.
FHA, you continue to pay the premium.
So 20% down. Let's say a house is $500,000. That's
$100,000.
Around $100,000 cash you need to show up with.
Yes.
And that's a big ask for a lot of families out there.
Yep.
So what if you can only afford, something like 10% down at that point?
That would be an insured loan.
That would be an insured
Anything
loan.
less than 20%, you're going to have to get private mortgage insurance.
But
that's available.
Yeah. And it sounds like that's a pretty common thing.
Yeah.
So what is the pre-approval process?
Pre-approval is very helpful to everybody involved. What that means is you go and see the lender, first of all.
Oh, okay.
The realtor probably is going to direct you to see the bank or mortgage lender of your choice.
And is this before you've
even looked at anything?
Okay.
So what it does, it helps narrow the scope, for one thing. The lender is going to sit down and look at some basic income qualifications. They're not going to verify many things, but they might look at your credit, talk to you in generalities, and then they're going to help you determine what you can afford.
Right.
And that helps the realtor too, because if you can only afford $300,000 home. They don't want to be showing you $700,000 homes. It's a waste of everybody's time. So that's what pre-approval is all about. And I think the flip side of that is if you have been pre-approved, whether it's for construction, whether it's for buying a lot, or whether it's for buying an existing home, I think it gives you a little leg up on the competition.
Oh, interesting.
Who's trying to buy that same property. You walk in and show the seller, here, I got this letter from my bank, and this should be a smooth sailing.
So do you recommend getting pre-approved if you want to build your own home?
I think that's helpful as well, because the building process, again, is pretty complicated.
Yeah.
It's rewarding as all get out. You get to put your own signature on things, everything from your landscaping plan to the exterior look of the house and all the colors and so forth. But pre-approval might help you acquire the lot from the developer. Might also help you with the builder, who's going to feel more comfortable knowing that you're already approved for the loan, and so on.
Now, if let's say you're pre-approved for $300,000 and you wanted to, you got to building your home and quickly you realized that this is going to be far over what you were pre-approved for.
Yes.
Where is the stopgap? Like, where does, if the builder's like, that's going to be too much, or maybe your lender is, you can't afford 1,800 square feet, you can only afford 1,400 square feet.
Right. Well, you may have to find a different lot.
Oh, okay.
Because many subdivisions have minimum square footage size requirements and garage sizes and so on, that cost can't be cut.
Yeah.
So if you are only qualified for a loan of $300 and you've got $100 to put in the deal, that sounds pretty good.
Yeah.
But if your home comes in and costs, $500,000 or $600,000, it doesn't work.
Are there ever any like scenarios where people are 3/4 of the way completing their house and they run out of money? What happens then?
That's a problem.
That's a problem.
That could be a train wreck.
Yeah.
But hopefully in the building process, what you're doing is pre-approving the budget.
Mm-hmm.
And as a lender, you have an agreement with the builder. There are no change orders unless the lender approves them. And changing anything in a house that you're building costs money.
Yeah.
You can't just say, well, I don't like that window there. I want to move it over here, or I want to upgrade this. It's uncommon for new construction to have minor financial changes because it's just natural. You go through the process and you're shopping and you see your budget for whatever.
Yeah.
And you think, gosh, I'd sure like to have this. Well, again, that's a change order.
Yeah.
If you're going over the budget, or if you're making a change after things have already been built, or even before they've been built, they're still in the planning stages, you have to remember that the builder has in mind that set of plans that he's going to follow. And anytime you make a change, not only does here's where the changes happen or where the additional costs happen, it's not so much in moving the window, but it throws the schedule off.
Oh, okay.
So he's got, everybody from tapers to electricians to framers even, and he has to schedule all those guys.
Wow.
And you make a change, and it throws the building schedule off. That's another reason why it's expensive.
Do builders have to communicate with the lender then? Or
yes.
Yeah, so lenders have I guess you want to call it a relationship with the builder throughout the process, or
They should.
They should.
They should.
Okay. Yeah, so if they did want to change the window, the builder comes to the lender and says, hey, this is going to be more expensive, or how does that
well,
conversation
the builder, documentation-wise, is going to talk it over with the owner of the home. they're going to agree into a change order, which is a change from their contract. And then before that change happens, they have to run it by the lender. So the lender may have to requalify you.
Wow.
Typically not,
Yeah.
but it could come to that if it's a significant change.
Well, so it's probably pretty good to have a good relationship with your lender
throughout the
process.
I think it is, and most lenders love construction lending. I did a lot of it at the bank, and it's a lot of fun. You, as a lender, you get out in the field because you have to be out there every month to make sure the draw requests they're asking for are legitimate in terms of how much you estimate that the contract's been completed.
Yeah. That's an interesting process. So when it comes down to, beyond the pre-approval process, good credit versus bad credit, what are the biggest differences that, other than, I guess, loan amount?
Yeah.
What other things can you expect?
Well, I think with a credit score below 720, you're going to pay more for your loan. It's riskier from the lender's perspective and from the market's perspective.
Yeah.
So if your credit's not very good, you're probably going to end up paying a higher rate. You can maybe make some difference by putting more down, but that could be part of the problem in the first place. So, and 720 realistically is not a terribly high credit score. If you push the upper 700s, that's good.
Yeah.
But 720 and under is just not so good.
What if you had a couple that came in and let's say the husband had 700 and the wife had 800? Do you recommend them both being on the loan, or maybe just the one with better credit? What are your recommendations on that?
Well, I haven't thought about that one, to tell you the truth. A lot of it depends on how they want to take title to the property.
Oh, okay.
So if they're going to be in joint tenancy, as an example, which is probably the most common, they're both going to have to be on the loan.
Yeah.
Sometimes they may end up, I would have to think, paying the higher rate because of the spouse's lower credit score.
Yeah. Unless they just wanted, the wife on the title and then the husband's not on the title.
Yeah, but things have changed so much. And to think that you might, I can change it later.
Not so easy.
Not so easy, because what we do in the mortgage business is sell the note. We make the loan, we sell the note to a long-term investor, and that long-term investor comes back from a quality assurance perspective oftentimes and double checks a year or two or three down the road. So if you've attempted to put the property back into joint tenancy or something, they're not going to allow it.
Oh, wow. How comes?
Because the package of credit that you have sold that investor says this is the deal.
Okay.
This is the way it is.
Yep.
So
if he wanted to get onto the title, then they would almost have to take out a whole new loan or refinance?
Possibly. In any case, what they would definitely have to do is get the holder of that note's permission. A somewhat lengthy process to do.
Talk a little bit more about the different types of loans. You were mentioning like construction loans. What are some of what are the different types?
Well, I guess where I'd like to start is first, to build, you got to find a lot.
Yeah.
And there's a couple of different ways to do that. You might have plenty of equity in your existing home, so you could take out a second mortgage on your own home under whatever terms are available, and you can negotiate and sit on the lot while you're going through all this planning process. Lots of banks make loans to acquire the lot. So you might put 20% down on the lot purchase, and again, go through the planning process, put your budgets together, and so forth. To a certain degree, you've paid some duplicate costs, maybe. But then there is, if you've got all your ducks in a row, there is a loan called an all-in-one. So you start, and it takes longer because you have to have everything from plans to cost breakdowns, and better credit, perhaps.
Great organizational skills, it sounds
That
like
too. Yep, that too. But you're only going to close the loan one time, so you're going to
okay.
pay one set of fees, essentially. One appraisal, one set of title insurance. Maybe at the end you might have to pay a small premium for the title insurance to date it down.
How do you get an appraisal if a house doesn't even exist?
From plans and specifications.
Oh, okay.
And that, of course, takes longer. And the builder has to, describe in words the specifications as well as the set of plans that you have to get approval for the building permit.
Okay. If I, it seems like some people buy lots out there and they don't necessarily build right away. Is that a pretty common practice, or do people just buy a lot and then wait until they have enough money to build a home? How comes people?
I think there's a little bit of both. You might buy a lot with a home equity loan, for example. Put a second mortgage on your house and buy a lot. And, you want to take your time. If you want to do the purchase money loan for the lot, 20% down on the lot's the collateral.
Okay.
Typically, there has to be a very strong intent to build at some point. That loan is going to have a balloon payment in it 5-6 years down the road, but you have to convince the lender that you are in fact going to build. It's just going to take you a while to get things together.
What's a balloon payment?
That's going to force you to refinance, to pay off that note.
Okay. So that's kind of the bank pushing you to build quicker, or take out a bigger loan?
Well, I think the intention again is to make sure that you're not buying this lot to speculate on its value.
Oh, okay.
Okay.
Gotcha.
You really truly intend to build.
Yeah.
You just haven't put all the pieces together. Maybe you haven't got a plan. At this point, you don't know any builders. You're a long ways down the process.
Do lenders try to avoid selling lots that people don't intend to build on?
I would say so, yeah.
Yeah.
Unless they've got existing equity, they might rather have for collateral the equity in your existing home, because really the lot can change value over time. You hope it doesn't go down in value, but that's subject to the whims of the market. And in tough times, lots are hard to sell.
Mm-hmm.
Right now, lots are a premium just because there aren't very many of them.
Yeah.
There's only about 3 places in town you could actually find lots in a subdivision.
Yeah.
And that's Linda Vista, Canyon River out east of town on the golf course, and then the Ranch Club. And there's really not very many other choices. There's some smaller ones and some older subdivisions that have a few lots left. But
it's interesting how that is, lots like that are so hard to come by in Missoula, because I grew up in Pennsylvania, and I grew up in a subdivision. And places like that are, there's subdivisions being built left and right. But here in Missoula, they're not necessarily being built left and right.
We don't have the population base to support a lot of speculation. And that's the difference.
Yeah.
It's all about when you go into a subdivision as a developer, It's all about how quickly you can sell the lots off. And you can see an appraisal and it might say, well, the absorption rate, how quick that subdivision is going to be absorbed into the market is X years. And typically my experience has been it's usually double that or more. So the developers got to be able to hold on through some pretty tough times. Things change quickly.
Yeah. It's interesting with that juxtaposed next to, this is a little bit off topic, but on your way out on Mullen, you see all those townhomes and condominiums being built.
Yep.
And those seem to get filled up pretty quickly. And it's, I don't know like what I'm trying to get to here, but it's interesting seeing like, oh, there's lots of condos being built, and where they're all stacked
cheaper.
on top. They're much cheaper.
Much cheaper, and the available number of people to buy as a whole is much bigger. So again, we get back to the first-time home buyer. Yeah. It's easier to get in one of those. You don't have to have as much down. They're cheaper to build.
Yeah.
So therefore, they're cheaper to buy.
Yeah.
Because you're building multi-units at one time. So you have some economies of scale within that process.
Yeah, it's interesting to see how cities and towns, try to delicately balance, the amount of those more affordable homes and then, nicer, more large lots
Sure.
when they can find the space.
Sure, when they can find the space, and that's part of the problem. And a lot of the, townhome condo lots have been a repurposing. There may have been some kind of commercial there before. Mm-hmm. Well, it's expensive.
Yeah.
So you have to increase the density in order to make it pencil out. And that all goes into the mix as well.
Yeah, I see kind of down towards Stevensville, Florence area, and they do have more space down there. So you can kind of see there's subdivisions kind of popping up a little bit more here and there down there,
right.
More so than Missoula.
Right. And you're going to find, maybe cheaper down there.
Yeah.
But again, everything has a cost, and the cost to live in the Bitterroot is the commute.
Yeah.
Although more and more people are working from home these days. So it's going to be an interesting transition in this market.
Yeah, I've watched the market down there for the past couple of years, and it's not that much more affordable than Missoula. If you want the property, the land, the house, you're going to be paying the price for it.
That's true, and in lots of cases down there, they don't have sewer and water,
right.
City-type services.
Right.
So the minimums are you have to have at least an acre to have both a well and a septic tank.
Oh, wow.
So therefore, more land.
And then you have to get it developed, it sounds like then too. Or, you have to get that septic tank. You need the electric lines ran to the house.
Right.
And that.
Right. And that's all part of the planning process too, right. And the approval process.
So kind of jumping off of that, sometimes what you see isn't always what you get as far as the price of a home or the price of a lot or how much you plan on spending. What are some fees associated that can add up, that you may not take in, people may forget about, they may not take into account, they're like, oh, this is a $400,000 pre-built home. It might be a little bit more than that on your.
Well, you're normally, even on the home that's already built, you're going to have a loan origination fee, which is about 1% of the loan amount. There are some no-fee loans, but you pay a higher rate.
How is that origination fee calculated?
1% of the amount of the loan.
Oh, it is. Okay.
So if it's a $300,000 loan, 1% is $3,000.
Okay. Does that fluctuate ever with the market, or is it always just 1%?
It depends. Again, you can get a loan without an origination fee, but instead of paying 4% interest on the mortgage, you might pay 4.08 or something.
And is that a choice you can make?
I think it is.
Yeah.
Yeah. You're always going to have an appraisal.
Right.
You're always going to have title insurance.
An appraisal, do you get to pick your appraiser?
No.
The lender picks your appraiser
And
for you?
even the specific bank lender doesn't pick the appraiser.
Oh, how comes?
Because there's been too many abuses in the market over time. I know at our bank, on the commercial side at least, I couldn't pick an appraiser. I would have to call my home office, and they would send out requests for bids to several different area appraisers, and they would pick the appraiser. Residential, I'm not sure how that works anymore, but it's probably something similar. They have a centralized order point, and
do you pay the appraiser, a baseline fee or?
yeah, residential appraisal is usually a fixed fee.
Okay.
And again, it's been 5 years since I was in the game, but probably around $500 would be my guess.
Yeah.
Title insurance is probably a little more than that.
So you can expect to spend anywhere, well, depending on the price of the house, between $3,000 and $5,000 in fees.
In closing costs and fees, I'd say that's probably a pretty accurate statement.
Yeah, it's interesting that you brought up how your bank can't even select your appraiser for you, because my wife and I are currently in the process of refinancing. And we need our house to get appraised at a certain amount in order for us to get the new interest rate.
Mm-hmm.
And we're fingers crossed that the appraiser appraises it at the required minimum. And we're like, well, maybe we can just be like, here's a case of beer. Can you get us to 200?
See, and that's the problem.
Yeah.
Everybody's supposed to be beyond being approachable in that regard.
Yeah.
And there's been plenty of abuses over the years.
Do lenders prefer to lend to community members over out-of-state people?
You mean, well, typically it's going to be cheaper and most cost-effective for an owner-occupied home. So if someone is moving from out of state and intends to occupy the home, they're moving to Missoula, sure, they're going to get financed.
Yeah,
no problem.
Yeah.
Same process, that you want to build or buy a house at the ranch club versus somebody from out of state moving here. We're going to go through the same approval process for both of you. Run credit, verify income and assets, verify the collateral, okay, the title to the collateral. So the process is really no different.
Which brings me to cash bidding for a house. We often hear about that in Missoula. That people come to the table with cash in hand and the house sells for over what because people want to pay cash. How does that happen?
Supply and demand.
Yeah.
And it can get out of whack pretty easily.
Which throws off the whole housing market then, correct?
Well, it does, and what it forces happening, you have a buy-sell agreement on the property, and somebody pays more than that for the property, outbids another person. That's cash out of the new buyer's pocket. It's not going to get financed by the lender.
All right, so the Ranch Club has a great homeowners association.
Yes.
Do those costs get included into your mortgage?
No.
No.
They're not, unless you buy a townhome out there. And let's talk about that for a minute.
Yeah.
The single-family detached home has a homeowners association. And typically all it does is take care of parks. Maintain them, perhaps build them in the first place, remove the snow from the sidewalks, and that's about it. So my homeowners dues at the Ranch Club, I think, are a little over $300 per year, and that maintains a 2.5 acre park.
Oh, wow. When you say park, is that like a playground or is that like...
Just green area at this point, and it's up to the homeowners if they want to develop, play area for kids or playground equipment or something like
okay.
that. They could build that into their budget.
Does it shovel? Do they plow your driveway or no?
No.
No.
They're gonna shovel the sidewalk in accordance with the city regs in front of the park.
Okay.
Okay. So they're just like a homeowner in that regard.
Gotcha.
Now the townhomes or condos, condo is a different form of ownership, but at the Ranch Club they are townhomes. There is a townhome association, but to maintain the homogeneity of the project, you pay dues, which might be a couple hundred a month. That handles everything outside.
Oh, wow.
Of the townhome.
Wow.
If the duplex building, the 2-unit building, needs a new roof,
Really?
the condo association pays for it.
Even if you're the homeowner?
Because the homeowner is paying dues, and the dues are several hundred a month.
Wow.
Which seems like a lot.
Yeah.
But over time, in my single-family home, I'm going to have to repaint. I'm going to have to re-roof. I may have to change a furnace. I'm certainly going to have to buy a new hot water heater.
But so that stuff is like hot water heater and furnace.
That's inside, so that's the homeowner's responsibility.
Okay.
But anything outside, from paint to landscaping to trimming the bushes to roofing,
siding as well.
Siding, all of those sorts of things are all the same, and they're all covered by those monthly dues.
Wow. And that's a lot of, depending on what your physical time is worth. Some of the weekends you're just like, I do not want to get out in the garden.
Right.
I just don't want to do it.
Right.
And paying someone to do it for you.
Well, that's exactly right.
How comes there was a separation there between individual home owners not getting that sort of, I want to call it like a nice royal treatment, and then the town homeowners getting that?
Well, a lot of individual homeowners out there at the Ranch Club don't like to mow their lawn either.
Yeah.
So there's lawn services that will come out and mow your lawn for you.
Okay. And the Ranch Club has a list of people.
Even Ranch Club has a number of people that come out and do that sort of thing. And they also maintain the common area parks. So it's just a conscious decision for what people want.
Yeah. Well, that's great to know. Are there still... It seems to me as if a lot of those side-by-side townhomes are pretty much filled up. They're not continuously building those right now, correct?
No, not at this point. I think the Ranch Club has about a total plan from years ago of around 350 lots. They're probably 2/3 improved lots built out, and probably 80% of those lots have houses on them.
Yeah.
Or are under construction. So there's only about 2 phases of lots left to improve, to put in roads and sewer and so forth. One of those phases, and I don't remember which one, will have perhaps some more townhome lots.
Oh, okay.
Some attached
Yeah.
type housing. So that's a few years down the road, probably.
Yeah, it's amazing. I thought the Ranch Club was almost completely finished being built out, and I have for years. And then you go out there and drive through, and you're like, oh my gosh, there's plenty of land still for there to be houses.
There's probably room for another 100 lots. Some of them being, again, common wall type lots, so a little denser, but still some nice single family lots to come.
What's back to the lending? What is one big thing that you notice people get hung up on early on in the lending process?
You mean with the process?
Yeah, people are a little taken back by how much they originally planned on spending, or what they if people come to you, they're like, I want to buy this $500,000 home, but there's no chance that they're going to get approved for a $500,000 loan. What are just some things that that in your history as a lender that you've seen people kind of get stuck up on or hit a speed bump or?
Well, I think some bumps along the way are not paying attention to changes once you've started construction. You need to not you need to be able to have some additional liquidity to pick up some of those things.
Yeah.
Because changes are inevitable. I had been in the construction lending business off and on for close to 40 years. When we built our home, we had a very reputable contractor. We agreed upon a plan, made lots of changes before we ever broke ground, and I still ended up with numerous changes. I had some pluses and some minuses, so I'm probably better at it than most in that regard, but I really watched the budget. And that's when you can get surprises. You change carpeting. Some of the things people don't think about are window coverings.
Yeah.
Landscaping. Again, you have a budget, but if you start making changes, adding plants, sprinkling systems, larger beds, and so on, the cost can go up.
Yeah.
So you need to be aware of that for sure. And I would have to say that's the biggest, scariest item. Also, depending on the kind of loan you have, you may or may not have protection against an increase in rates from the time you start construction until you roll to the permanent loan. The only way to get around that is the all-in-one loan we talked about.
Mm-hmm.
That'll have some upside protection. If today's rate is 4, you might have a maximum not to exceed 4.5. If rates go the other way and fall, there's probably a no-fee close at the lowest rate. But that's about the only protection you're going to have.
So how do you lock in that? Are you able to lock in that initial rate that you're first quoted when you're lending?
In the all-in-one loan, yes. If you're doing 2 transactions, if you're buying the lot today and you don't know when you're going to build, it may be 2-3 years down the road, you're probably not going to get a lock on the rate.
Okay. That would make sense. I guess, it'd be nice if the rate went down.
Yes.
And I'm sure it does sometimes,
Yeah.
but probably not.
But there's alternatives too. One of the alternatives being, okay, you were planning on a 30-year fixed rate loan. That's me. I'm very conservative. Or a 15-year fixed rate. And rates move against you. There's still going to be adjustable rate loans out there where it may be a lower fixed rate for 3 to 5 years or something like that, and then starts to adjust based on an index after that point.
Okay.
So that might be an alternative to save you. And you can always refinance later too.
Yeah. And one last question. You've answered all my questions diligently so far today. Thank you so much.
Great.
One question we've been asking all of our interviewees is, and it's kind of what I've asked you already about the common mistakes that you see when people are building a house, but what's one question that I haven't asked that you wish potential home buyers or home builders would ask you?
As a lender.
As a lender.
That's a good one. I think just an awareness and sitting down and building the camaraderie, because it's a team effort.
Yeah, definitely is.
And the team has to bring the project in on time and on budget. So if we're all pulling towards the same end, and understand that going in, I think you have a better chance of that happening, and you have better rapport. Sometimes people are so busy you can't schedule that. It'd be nice nice to have one meeting around the table with everybody.
Yeah.
And that doesn't often happen in
Yeah.
reality with the builder, the lender, the borrower, and sometimes an architect,
Yeah.
Who has drawn the plans, unless you're just building a plan out of a book or a plan that the builder has built before. That's what we did. We didn't have an architect.
Oh, really?
We knew the builder well enough. I'd been in town for 30 plus years, and he showed me some plans, and I went, wow, that's exactly what we had in mind. So we were able to use his plan rack.
Should lenders, well, lendees, I guess I should say, should lendees be scared of wasting your time and calling you too much as a lender?
I don't think so.
No?
I think we'd rather be informed if there's a problem brewing or there's questions that we can help. It's a terribly complicated process, and everybody's life, particularly these days, has so much stress. And let's take the stress out of it, and let's try to make the process as enjoyable as possible and fun, and it's exciting.
Yeah.
And again, you get to put your own signature on things, and you're going to have that pride at the end of the day, and friends are going to come over for a cocktail and go, wow, this is really cool. You did such a wonderful job. Who's your builder? He's great. And that's warm and fuzzy.
Yeah, that's great to take away from this is, having such a close relationship with your lender, not being afraid to have that relationship. Because I know when we were going through the home buying process, we were a little hesitant to call our lender for small things. And it's good to know that, that's not a problem for the lender.
I don't think it is at all. Like I said, I think that the lender would prefer, even in the existing home loan process, we'd prefer to answer the questions and get things up on the table and have the borrower truly understand what we're doing, why we're doing it, and what the end game is. And just try to take all of those questions out of the mix and all that stress out of the mix for everybody.
All right. Well, I think that'll be it, Tom. Tom Butorac, thank you so much for joining us.
My pleasure.
Enjoy your time on the golf course and at the ranch club, and
with my grandkids around the pool.
It sounds
absolutely
awesome. And a cocktail at the restaurant in the evening.
There you go.
All right, Tom. Have a great day.
Thanks, Will.